All right. Excited to be here and presenting. I've been in the community for about a year and a half, and this is my first time presenting on red light, green light. So excited to share this with you. I haven't always been keen on partnerships, but since joining this mentorship, this community, I've seen a lot of success with partnerships, and it's really inspired me to pursue what we're pursuing here. And the company we're looking at is a roofing company here in Scottsdale. It's been around for 8 years, and this we're actually under LOI. So we're acquiring 75% of this business. The owner is staying on and retaining equity. He has a pretty small team. I think their USP is really the ability to move fast and price competitively. But there's a lot of value add opportunities with this particular deal. Um, so we are raising capital for this deal. We're seeking 550K. We'd like to get a combination of equity and debt injection. Just some information on the roofing industry in general. I know some of the other markets outside of Arizona are very heavy on the insurance work. In Arizona, we don't get a lot of storms or a lot of adverse weather, so a lot of the work they do is repair and replacement. And 99% of this particular company's business is residential, with a very small, minimal commercial work that they do. We're breaking down the roofing market opportunity to the serviceable, attainable market here in Phoenix. It's a growing market. There's about close to 5 million people here in the greater Phoenix area. This particular company is only serving the East Valley, which makes up of Scottsdale, Tempe, and Mesa. So I think there's a huge opportunity to expand the geographical footprint. We've been developing a lead generation machine that's actually starting to bring in some lead flow. We've passed on a few smaller roofing companies, just because they just didn't fit. But if we go through and close on this particular deal, I think they'd make for great bolt-ons to this particular roofing company. So the financials, it's averaging around 2 million a year in top line revenue with margins between 12 and 14%. There was a slight dip in 2022. In 22, this particular owner acquired this business from the previous owner. So during the transition, there was a slight dip, but as you can see, year over year, the margins have continued to grow. This particular year, looking at P&Ls and financials for this year, they are on track for a 10% increase year over year. With the adjusted EBITDA for average 3 years is about 260, although last year they did about 315 in adjusted EBITDA. So if we continue with the 10% year over year mark, and by 26 we should be up to 600K in adjusted EBITDA. So the acquisition structure, we've evaluated the business at 900K. Like I mentioned, we're acquiring 75% of the business with the owner staying on. Um, I've we've built some amazing rapport with this owner. We've explained, and he's very much on board with the roll-up strategy that we have in place, in acquiring other roofing companies throughout the country. So he's going to bring the industry expertise and the experience. He also owns a coaching business where he helps contractors of all trades grow and scale their business. I actually met him in September of last year, and I invited him to the Dealmaker event. So he was actually in attendance in the Dealmaker event in Scottsdale. I introduced him to Carl, and we told him a little bit about what he was doing with this coaching community. And Carl said it was a great strategy for the Trojan horse method in coaching some of these contractors, some of these tradespeople, and then potentially purchasing their businesses from them, when they're ready to exit. So the value add opportunities we see, right now it's a pretty small team. The project management's always also doing sales and admin. So I think by adding a sales team that can really drive and grow the business, as well as increased focus on commercial sales. I think they're leaving a lot of money on the table there, and developing a sales team and developing the commercial sales side should drive and grow this business. And like I mentioned earlier, the bolt-on strategies with some of these smaller deals that we've passed on, I think this would be a good platform business to bolt on to. And the same thing for the geographical expansion. We've passed on a couple of deals in Tucson, just because it's a couple of hours from here. But with this particular business and bolting on some of those smaller ones and expanding the geographical footprint is really going to help drive and grow the business. As mentioned, we are working on a roll-up. We do have some pretty good deal flow. This particular deal is under LOI. So like I said, we are raising capital. We do have two other LOIs out there. Hoping to get a response on those here pretty soon, but we have some leads and some deals that are flowing. So everything is off market. We haven't really messed with any broker deals at all. We're going straight direct to seller, and it's pretty awesome. In the lead generation system that my partner Caleb's actually in Protege, but he couldn't be here today. He had another meeting to attend to. So he's actually the one that's leading the lead generation and the systems for us. As mentioned, it's a pretty small team. The GM, there's a GM. The owner really, he spends pretty minimal time in the business, and really what he's doing is quality control. That's why I think the development of a sales team is going to be crucial for a business like this, and driving and growing this business. So three acquisition experts, all three of us have acquired businesses. We have 25 years in combined experience. The 35 million in combined sales is Tyler, the current owner. He's already had a successful exit selling a pool company back in Tennessee. And as mentioned, he has a community of contractors that he coaches on a community level and also on a one-on-one basis, and combined the clients that he's coaching combine a combined revenue of $100 million. So this is our team. Myself, I'll be spearheading the acquisition side. My background's really been in sales. I believe I'm the guy that just moves the needle forward. So really my job's going to be on the front end, gathering financials, talking to sellers, negotiating. Caleb has been our systems wizard. He's developed a very unique and proprietary system that he's been working on for several months now, and we're starting to see the leads start to flow. And then Tyler is the current owner of this roofing company, so he's gonna help with the implementation. We also developed something called the ACT Blueprint. So the blueprint is basically SOPs for a roofing company, from start to finish, that he uses in his current business. So once we acquire the roofing company, he'll be working with sellers to onboard and implement this blueprint so we can continue success and continue to grow these companies. So if you're interested in working with us, my phone number, email is there. You can reach out to me on Circle, but I will pull up the one sheet for everybody to take a look at. So as I mentioned, it's about 3-year average EBITDA of about 260. Last year they did about 315. Seller psychology. So, Tyler is a young guy. He's 30 years old. He does have some motivation. He does want to really scale up the coaching side of the business, the other business that he has, but also wants some help developing sales team and commercial sales. He does have some urgency, but definitely no distress. As far as legacy goes, this particular roofing company is here in Scottsdale, but his family owns another under the same name. They own a roofing company in Tennessee, just with the same name and same same branding, just in Tennessee. So I think legacy is very important, and employees just as much, just because in the other business they have a lot of family members that are within the business. So um, we are looking at in this particular business, we have a GM that's already been identified, so won't really have much changes as far as employees go. I think it's just going to be adding on, like I said, the sales team and developing that and working on the commercial side of things. If we aren't able to find the equity and debt injection that we're looking for, we are prepared to go the SBA route, which based on this model and the other models that we've worked on, the cover ratios on this with an SBA deal over 10 years is definitely works out, pencils out. So there's not really much of an opportunity for an annuity structure. He is looking for cash up front, but again, he is staying on, and he is going to help us grow and scale, and also tackle some of these other businesses that we have in the pipeline and the deal flow that we're getting right now. So yeah, would love to hear what your guys' thoughts are on the one sheet and on this business in general. I personally don't have experience in construction, but we are leaning heavily on Tyler for that. My background really is in sales. Caleb's background is really in systems and operations and lead generation, which again he's done a great job building the lead generation system that he has, and we're starting to see some good deal flow here.
Excellent. Very good presentation. Great job. So, in terms of some of the numbers here, I'll start off, but yeah, anybody else feel free to jump in here. So I guess my biggest question would be, what happened in probably 2022 year one. There's a big jump there in gross profit as compared to revenues, almost 83%. So I'd have a question about that, and then the gross profit from the current year to the most recent year is about it's what is it? I think it's exactly the same. So I'd have questions about the numbers. I'd wanna see those and dig into those, and then obviously the balance sheet numbers look like they're just kind of estimates. So I'd probably want to do quite a bit of financial due diligence around this and dig into those and understand those more. But yeah, I think that's kind of my initial feedback on it.
Yeah, and part of that, so like I said, there was a transition in 2022. The P&Ls that I looked at from 21 and the first half of 22, the previous owner wasn't, he had everything as overhead expense. He didn't really calculate anything under cost of goods. So I think that's why we're seeing that fluctuation in margins and the revenue, the percentage of revenue. And then yes, the balance sheet, as far as they are rounded numbers. They're really, we still have some more digging to do on the financial side of things, but as far as I'm aware, the cash is a little light on hand. And then the liabilities are pretty light as well. um, AR is pretty decent, but the fixed assets are really just trucks and equipment. So definitely going to do more due diligence on the financials for sure.
Yeah. The other thing that I would want to look at, I don't know what the current liabilities are, maybe it's, but typically in roofing businesses, I see deposits. So, having that working capital number, but any sort of deposits that customers have put in for jobs that haven't been completed, making sure that those come along with the business as well. So that'd be important to know that as well and how they're tracking it and what that balance actually is. Ayaz, you have your hand up?
Yeah, quick question, Angelo. Great presentation. I'm actually, you said this deal was in the LOI. I'm actually talking with a drywall company in Boston, and we're doing a similar structure where we're buying 85% of the business and letting the seller retain 15%, because him and his son are still in the business and want them incentivized and have the upside. I'm curious how you structured the deal here. Like, so you're funding, what portion are you funding through SBA? Let's just talk me through the deal structure a little bit.
Yeah, so if we go the SBA route, and that's the thing, there's some flexibility here. With SBA, there's going to have to be a PG. So we're looking at restructuring the SBA to have him retain 19% equity. But if we are to raise capital via private equity or a couple of investors, we're looking for basically the 550 is just going to be split in half. 275 is going to go towards 30% equity that the investor would get, and then the other 275 would go towards a debt and repayment, over a 5 or 6 year term.
That's if you go the SBA route. And what's the other option?
No, no, no. So if we go the SBA route, then we'll just use the SBA funds, 100%. We'll just, do the 10% injection and that's fine. But if we are able to get either private equity or an investor or a group of investors to come in on it, then that's when we're, raising 550, 275K is going to give them 30% equity and the other 275K we'd want in a loan.
Right, because the reason I'm thinking is also because of low cash on hand, you need working capital and the margins to cover the debt service. So SBA versus private equity, the rates would probably affect the cover ratios, right?
Yeah,
Is there any real estate? There's no real estate in the deal?
no real estate.
Okay. All right, thanks.
You're good. Lenny? Oh,
You're on
you're on.
mute.
Sorry. Really like the deal. I like for me, I'm a DSCR guy. I love debt service coverage ratios that are really high like this. But I do think I agree with Jeremy. You got to look into these numbers, very low cash on hand. Their EBITDA margins for the year that the current year that you utilized in the one sheet are up 20% or so. I think it's a little bit more, maybe closer to 25%. So you really have to dig into, why the margins, the EBITDA margins, grew so much from probably 22 to 23. You always have to be careful of the banner year aspect of M&A where, people kind of make their books look really good for sale. With that said, though, it seems like their asking price is very reasonable. It's actually below the one sheet number, I believe, that you have. So I think if you can get some answers to those numbers questions, and the fact that the seller is rolling over equity, which I also love in deals, makes them have skin in the game. If there's any issues, they have a lot of the relationships probably with their clients or customers. So I think if you can get the answers to those numbers issues, you got a pretty good looking deal here.
Thank you.
Excellent.
Sure.
Thank you, Matt. Les.
Yeah, I posted in the comments there, but how are you going to be paying yourself and your other investors that are popping in here? I mean, you're adding two to the overhead, right? And you've only got, unless it's already built in there and I just don't see it, from the finance page. It seems tight. Plus with the debt service that, Lindy's talking about too.
Yeah, and the more that we talk to different investors and we look at private equity, the SBA route seems like it's going to be our best route to go just because we can stretch it out 10 years and the debt service cover ratios it does pencil in. So to answer your question, I think if we were to bring an investor on, it would have to be someone that's in it for the long haul, that sees the potential of the roll up and what we're working on. So I think the more and more we dig into this, I think the SBA is going to be the best route that we go.
So how are you gonna pay yourself in the process is the question. Part of it.
So I mean, if we're, you know, distributions, I mean, there's if we're looking at a 10-year note on an SBA, and that's about 95 to 100,000 a year, and the business is doing 260K. I mean, there's still about 160K left in adjusted EBITDA. But you know, that's if the business continues to do what it does, right? If we're able to grow this and able to develop that sales team, we should be able to increase the adjusted EBITDA as well.
Okay, so you're willing to work for 50K for the year, and invest this thing so you can get the upside on the back end. That's what I'm hearing.
Yeah, you know, and there is a GM involved. There is a GM that's there, so
Mhm.
it wouldn't be something that's gonna require, you know, a 40 to 60 hour work week from us. I think we'd be working on some of the more high level stuff because currently the owner, you know, he's really just doing quality control. He's overseeing everything. He's not involved in the day to day as much. So yeah, and I mean, we're looking big picture. If it was something that I was looking, you know, obviously I'm not going to get rich off this deal, and I fortunately have other cash flowing businesses that do good for us. So you know, I'm not looking to take a huge salary or looking to take you know, a huge chunk of the EBITDA from this. We're really focused on the long-term goal and the whole roll up that we're working on.
Cool. Awesome, man. Appreciate it. Good luck.
Thank you.
Excellent. All right, we're almost at time here. One more question, James.
Yeah, with this bringing on sales team and everything, all that is a ripple effect. And has the owner of the company, has he got additional labor recognized? I mean, and additional assets to bring on to cover those sales, additional trucks, additional equipment. Again, the labor, has that been quantified and do you have a game plan for that?
Yeah, so he runs the business very lean. You know, they majority of the they use subcontractors. I'd say, you know, the crew that they have, they don't even have an in-house crew. It's more project management and sales that they have. So, you know, the subcontractors, you know, they have their own gear and their own trucks and all of that. So, um, you know, I don't think it's going to be as big of a hurdle, you know, manning that stuff because they have crews. It's just a matter of getting work for those crews, if that makes sense.
Gotcha. Great presentation, Angela.
Thanks, appreciate it.